On March 30th, Indian Parliament had a discussion for 7 straight hours and passed 4 GST bills which everyone's talking about. So come, let's dig in and know what GST is and what are these 4 bills about. Hello friends, welcome to Gajista, the channel where we serve your curiosity about the happenings around. Today, we are discussing about the GST bill recently passed in the budget session of the parliament. So, what is this GST about? Goods and Services Tax or GST is one indirect tax for the whole nation, which will make India one unified common market. Most of the developed nations have already implemented GST for years now. GST is a single tax on the supply of goods and services, right from the manufacturer to the consumer. Credits of input taxes paid at each stage will be available in the subsequent stage of value addition, which makes GST essentially a tax only on value addition at each stage. The final consumer will thus bear only the tax charged by the last dealer in the supply chain. Now, why we need GST? In the current taxation system, there are several different taxes charged at central and state level on various goods and services produced in the country. This GST is going to subsume all of these taxes in one. The following taxes are being subsumed at central level: Central Excise Duty, Additional Excise Duty, Service Tax, Additional Custom Duty, or commonly known as Countervailing Duty, and Special Additional Duty of Custom. At the state level, the following taxes are being subsumed: State Value Added Taxes, Sales Tax, Entertainment Tax, Entry Tax, Purchase Tax, Luxury Tax, and taxes on lottery, betting, and gambling. So, after discussing the idea of GST in India for more than a decade now, the current government is finally able to get the bills passed in the parliament. The 4 bills presented in the parliament are: First, Compensation to States Bill 2017. As the GST is end consumer based taxation system, many producer states raised objection that they may lose their share of revenue. To take along the states, government came with a mechanism to compensate for goods producer states for any loss of revenue of the state by the GST in the first 5 years of rollout. Center will provide provisional compensation from its treasury to the states every quarter. Second, Central GST or CGST Bill 2017. This bill makes provision for the central government to amalgamate all the indirect taxes central levies like sales tax, service tax, excise duty, custom duties, various charges and cesses, etc. Third, State GST or SGST Bill 2017. Similar to the CGST, the State GST Bill enables the states to subsume all the taxes levied by states and frame a single state GST law. Fourth, Integrated GST or IGST Bill 2017. It resolves the interstate transaction system by enabling the center to levy tax IGST on the interstate supply of goods and services. The center later on passes the appropriate share to the respective states. Now, most of the discussion on the bill revolved around how different commodities would be taxed. The rates and scope of the long-delayed tax have been finally agreed upon by the powerful GST Council. The 4 GST slabs have been set at 5%, 12%, 18%, and 28% for different items or services. To keep inflation in check, essential items including food, which at present constitute roughly half of the consumer inflation basket, will be taxed at 0 rate. The lowest rate of 5% would apply to common use items. The peak rate of 28% will apply to luxury goods. Luxury cars, tobacco products, and aerated drinks will attract an additional cess on top of the highest tax rate. Now, how would GST be administered in India? Keeping in mind the federal structure of India, there will be 2 components of GST: Central GST and State GST. Both center and states will simultaneously levy GST across the value chain. Now, let's see how would a particular transaction of goods and services be taxed. You see a diagrammatic representation of the working of the dual GST model within a state. The central GST and the state GST would be levied simultaneously on every transaction of supply of goods and services. In the case of interstate transactions, the center would levy and collect the Integrated Goods and Services Tax or IGST. The IGST mechanism has been designed to ensure seamless flow of input tax credit from one state to another. The interstate seller would pay IGST on the sale of his goods to the central government. The exporting state will transfer to the center the credit of SGST used in the payment of IGST. The importing dealer will claim the credit of IGST while discharging his output tax liability. Since GST is a destination-based tax, all SGST on the final product will ordinarily accrue to the consuming state. So you must be wondering, what about the imported items? The additional duty of excise and the special additional duty IGST will be levied on all the imports into the territory of India. Unlike in the present regime, the states where imported goods are consumed will now gain their share from this IGST paid on imported goods. Now, how GST will be implemented and where do we have to pay the taxes? For the implementation of GST in the country, the central and state governments have jointly registered Goods and Services Tax Network or GSTN as a not-for-profit non-government company to provide shared IT infrastructure and services.
A jurisdiction simultaneously both in the center and the states, and in the process handing over the indirect tax administration to the first federal institution that India has created, where the center and the states both will participate.
A state-of-the-art comprehensive IT infrastructure including a common GST portal, providing front-end services of registrations, returns and payments to all the taxpayers, as well as the back-end IT modules for certain states that include processing of returns, registrations, audits, assessments, appeals, etc. Now, let's talk about what are the benefits of GST. The benefits of GST for business and industry are: it is the foundation of the GST regime in India to make taxation easier. GST will ensure that indirect tax rates and structures are common across the country, thereby increasing certainty and ease of doing business. A system of seamless tax credits throughout the value chain and across the boundaries of state would ensure that there is minimal cascading of taxes. The subsuming of major central taxes and state taxes with one GST would reduce the cost of locally manufactured goods and services. The benefits of GST for the central and state governments are: multiple indirect taxes at the center and states are being replaced by GST. Backed with a robust end-to-end IT system, GST would be simpler and easy to administer. GST will result in better tax compliance due to a robust IT infrastructure. GST is going to benefit the consumers also. Under GST, there would be only one tax from the manufacturer to the consumer, leading to the transparency of tax paid to the final consumer. Because of efficiency gains and prevention of the leakages, the overall tax burden on most commodities will come down. The government played it smart to introduce the GST bill as the money bill in the budget session. As for the money bill, the upper house or Raj Sabha can only recommend changes and not enforce it by voting. Because the finance bill is a money bill, the government just need to bring the Raj Sabha's proposal back to the Lok Sabha, where it has big majority, and ensure they are voted down. With the major GST bills passed, government is running on course for the launch of July 1 of the country's biggest tax reform since independence. Calling it a very significant step forward, Union Finance Minister Arun Jaitley said, "Government is reasonably optimistic about meeting the deadline. Though, they still need to push and get all the GST-related bills passed by the 12th of April to run on schedule, as the current budget session ends on 12th of this month." Thanks for watching. Please like, share and subscribe for more such videos.